Hello everyone. Bitcoin is trading at $116,100. And to be honest, I'm a little late with this video. Why? Because just an hour ago when I was about to start recording, it was trading at $114,500. And I wanted to say that we have two approaches to analyzing the current situation. This is purely technical analysis, and from the perspective of daily candles, it was indicating growth. I'll explain why in a moment. And then there's the kind of analysis where we say, let's think about what this could mean. And from this point of view, this long position might not even be a long, and even now when Bitcoin has gone up, well, by how much? By about $1,500. Let's move to the chart and see what we have. So why is this technically a long, right? If we don't add any further reasoning. Because Bitcoin right here at this spot on September 29th engulfed this red candle and closed above the two moving averages. In other words, there's simply no other way to interpret this. Yesterday, there was an attempt to drop below the moving averages again, but in the end it was unsuccessful. And despite the fact that yesterday closed with a red candle, it still closed above the averages. And that means the buyers, well, beat the sellers. At least for the moment, right? And now we see this movement continuing. Well, it's easy to sound smart after it already happened, but I literally missed it by an hour. Now let's remove all the markings and I'll show you something. Look at what we had here. We had a test of the 50-day moving average once, twice, 3, 4 times. Here we already started hitting the 100-day moving average and ended up below it twice. Here we stayed below it for a long time, and here as well. Accordingly, any return to the moving averages is a potential shakeout of short sellers from their positions before a deeper decline. The deeper decline to where? That would be to the 200 or 300-day moving average, which as of now is somewhere around $105,000. Let me show you how this looked before. Look, here we start testing the 50-day moving average, right? Getting closer to the 100-day. Now we're already testing the 100-day moving average, yes. And notice, after breaking through the 50-day moving average, we reach a new all-time high, and then we keep testing, and drop to some very significant lows around $75,000. So now the situation could repeat itself with some caveats, of course. Maybe it will even be a new all-time high, but overall, yes, the market, especially the stock market, is overheated, and that's why these risks need to be taken into account. But if we set aside all the risks, because markets can keep rising indefinitely, then this is still a technical long. What is the target for this long? Well, considering that we've reached the base of this candle, then the likely target for this long is at least the level of $117,100. Yes. Well, 100, 150. So, well, this zone here, according to this candle, actually this green candle is the defining one. Let's turn on the magnet tool. The defining one is this, with the level at 116,936. If we close above it, that will be the second breakout attempt. And with high probability, we will then see the price move even higher to around 119,840, just according to the price levels. And right now, the nearest target is the blue level at $116,936. It's quite possible that we might see it even today. We can't rule out the possibility of seeing 119,840 today as well. But for now, at the moment, it looks like a long, and there's really no reason to think otherwise from the perspective of the daily candles. That's it, we're all done here. The target is 116,936. If we close above that, the next target becomes 119,840. If we close above that, the next target is already $123,500 and a new all-time high. But it's too early to talk about that for now. Let's wait for today's daily close. Now let's take a look at what we have on the weekly candles. On the weekly candles, these 2 weeks, one starting from September 1st, the other beginning on September 8th, formed a bullish engulfing pattern on the weekly scale. In other words, we engulfed this red-orange candle, and this current decline hasn't set a new low compared to that green candle, but it did force a significant number of buyers out of the market. At this point, that's the only way we should interpret it. And accordingly, what levels does it target? Well, the first level is $117,500. But you can see that we've already approached it. So this target is no longer relevant. That means the second level is this consolidation zone. But it should probably be considered at the close of this huge green candle, 119,000. That's all. So according to the weekly candles, we have the level at 119, and according to the daily candles, it's 116,900 or whatever we looked at, 116,936. So for now, it looks like growth towards the area of 119,000. Now let's take a look at the monthly candles. On the monthly candles, the situation at the moment is threatening to turn bullish. What does it mean, threatening to turn bullish? Was it bearish before? No, it wasn't fully bearish because this particular red candle, or perhaps a more vibrant orange if you prefer to describe its specific hue, did not completely engulf the preceding July candle. That crucial engulfment was precisely what we were missing in order to confidently state that the monthly candles had definitively turned downward. However, despite that, we do indeed have a clear and distinct double divergence, right? A candle like this is potentially a reversal, and that's why the risks of a decline remain. But if October, which has just begun, ends up closing below the opening price of the August candle, though at this point we can only speculate since today is October 1st, the first day of the month, right? There are still 30 days left before the candle closes. So if it closes lower, October I mean, that still doesn't mean it's a long. If it closes above the August opening and the August candle started its movement from the level of 115,764, then that's along with the potential to continue higher. And possibly then we might see an alt season, or maybe we'll see it right in October. That's the story. But the monthly candles indicate that this is a very bad place to buy Bitcoin. Yes, you can buy it in any portions, at any levels, at any price, but technical analysis suggests that this is a bad place to buy Bitcoin. Now let's look at the 4-hour candles, and with that, we'll wrap up our review. What do we see on the 4-hour candles? Notice that yesterday we moved above all the moving averages. Actually, not even yesterday. Well yes, yesterday, September 30th. After all, September has 30 days. Then we started to drop below the averages, but eventually we moved back above all of them again. Right now we're trading above them, and that's a potential long. But again, according to the RSI, we're already overbought. But an overheated or irrational market can stay that way for as long as it wants, and for now we're focusing on the targets of the weekly and daily timeframes. Accordingly, 116,936 and 119,000 to 119,500 according to the weekly candles. Overall, this matches what I said in the previous video I recorded, where I mentioned that Bitcoin is more likely to reach the 117 to 119,000 level than not. Well, it looks like it's more likely to reach it. Hugs to everyone. Subscribe and leave your comments. See you next time. Goodbye.